Gentlemen, it's Aaron Fragnito, People's Capital Group. Tonight, we're going to talk about how to self-direct your IRA into real estate and how we've helped dozens of people self-direct their IRA into real estate here at People's Capital Group through the years. It's really been a nice process here where we've helped people with little time and experience learn how to invest in apartment buildings, learn how to make good returns in those buildings passively by investing with professionals in high demand markets. So we're going to break into that today and the process in taking your 401k or your IRA and diversifying some of it out of the stock market and ideally into high demand, professionally managed apartment buildings, which we'll talk about today. Quick disclaimer, this is not a solicitation for funds, tax advice, or legal advice. And we're going to break into it right now. So here's what we're going to cover today: how to self-direct your IRA into real estate or your 401k, how to create a checkbook IRA, which is an LLC owned by your IRA but managed by you. Very interesting strategy there. Also, a solo 401k to a self-directed IRA. I'm going to talk about how that process is completed and why self-directing your IRA into real estate makes sense for a lot of investors today, especially with the volatility in the stock market. Talk a little bit about People's Capital Group and how we've helped people invest in real estate over the last decade. Our process here, repositioning apartment buildings throughout North Jersey and our infrastructure of our in-house property management company, and why that makes sense to a lot of our private investors. And we'll talk about Seth Martinez and I, my business partner, and our mindset getting started here, helping people invest in real estate over the last decade, and why we do this in New Jersey and why we choose to do apartment buildings as well, and how we help people invest in that qualification process to get qualified to review different opportunities. Okay, so let's break into it here. How to self-direct your IRA into real estate. So the first thing you need to do is select an IRA custodian for your goals. Now, there are dozens of IRA custodians available in the country of the US here. They're all a little bit different, but they all pretty much do the same thing for the most part. You want to make sure that your goals align with them, depending on what you want to do with your IRA, how many investments you're making, how much capital you're moving, how often you'll need access to that capital. These will all decide the best IRA custodian for your goals. If you're not sure which IRA custodian to go with, or you'd like some suggestions, contact us here at People's Capital Group. We can suggest a few IRA custodians to you. We've worked with IRA custodians like Madison Trust and Next Generation and Equity Trust as well. So there's tons of IRA custodians out there, and we always suggest a few depending on your goals. We also know someone named Alan Johnson who could even help you connect with the software he has that allows you to determine the best IRA custodian for your goals. Once you select that IRA custodian, you're going to create an account with them. Generally, it's a couple $100s or so, pretty easy to get it started, mostly done right online these days. And once that account is created, you will guide your custodian to request however much capital you're looking to move, say from Fidelity or wherever your IRA or 401k is held, and then move that to your IRA custodian. Now, if you need to consolidate IRA accounts or different 401ks with past employers or things like that, your IRA custodian is going to walk you through this process and hold your hand and guide you to make sure you don't break any rules in consolidating your 401ks or IRAs, and make sure that the rules are all followed as you self-direct your IRA into this IRA custodian. So the IRA custodian will contact Fidelity, say, okay, you've been requested to move $50,000 from your IRA over to Madison Trust IRA custodian. Okay, now it's sitting with Madison Trust. At this point now you want to go ahead and move that into an investment, say with People's Capital Group, okay, an apartment building in a high demand North Jersey market. So People's Capital Group will send those investment documents to you and your IRA custodian. They will review them. Generally, with our suggested IRA custodians, they've already pre-approved our investment documents, but they'll need to review, if they haven't pre-approved them, our private placement memorandum, our operating agreement, our subscription agreement, and any other documents they might request, like an EIN or LLC formation document. So the IRA custodian reviews these documents, and then they facilitate the investment into the real estate fund, which then purchases the property and produces cash flow checks and large lump sums upon the refinance, which go back to the IRA custodian. The IRA custodian, of course, before making the investment is going to review and sign the documents, as will generally the IRA holder as well, the individual whose name is IRA is under their name there. And that allows both the IRA custodian and the IRA holder to sign the proper paperwork, complete the investment into the real estate fund so that People's Capital Group can use those funds to go ahead and purchase the apartment building or whatever the strategy is with those funds. And of course, as I stated earlier, the profit is then sent back to the IRA custodian. So it's not a way to necessarily pull from your IRA or cheat the tax code, but this is a way to self-direct your IRA, take your retirement funds bull by the horns here, and move it out of the stock market into professionally managed brick and mortar real estate, which a lot of people like, getting rid of the volatility of the stock market and diversifying some of their nest egg into cash flowing real estate. But let's say you want to flip a house and you're going to need access to the money very regularly, and you also want to invest passively with People's Capital Group, okay? The one-time investment in People's Capital Group is very simple. You simply move the money, into your IRA custodian and then into the real estate funds, and the real estate fund is going to send back cash flow checks and large lump sums upon the refinance to your IRA custodian. Now, let's say you want to do that, but you also want to flip a house. Okay, so you're going to need access to the money very readily, very often. You're going to need it quickly. See, plumbers and contractors, they don't like waiting to get paid. They want their money now. And if you don't pay your contractors quickly, they're not going to show up quickly either. And that costs you money as well if you're flipping houses. So to access your money very quickly, you may want to create an LLC that's owned by your IRA and managed by you. The reason you might want to do this is normally with an IRA custodian, they'll need about 3 to 5 business days to cut a check from their account as the IRA custodian. They also may need to charge you for cutting that check. So if you need to cut checks every week and you're flipping houses and you need this money quickly, working with an IRA custodian will not only cost you more money, but it also will delay your checks getting out to your service providers, which is not going to help move along your flip. So what most people do if they need access to their IRA funds very readily, say again, they're being active with the investment, they're running a business with or something like that. And then again, there's rules and regulations what you can and can't do with your IRA, and your IRA custodian will guide you in this, but you may want to start a checkbook IRA account. That's an LLC, again, owned by your IRA and managed by you. This doesn't mean you can pay yourself a management fee or pull from your IRA early or buy a beach house and live there on the weekends with your family. It's not a way to break into the IRA rules, but it is a way to have your access to your IRA more quickly and more having more transparency, exactly what you're doing with your fund. Now, in this case, it's up to you what to do with your IRA to not break the rules, right? You can't go to Home Depot and get a credit card for your IRA LLC account because your IRA cannot take on recourse debt. So it's up to you to know these rules, police your IRA LLC, make sure you don't break these rules. But again, this extra step is not necessary if you plan on making 1 or 2 or a number of passive investments with your IRA and moving the money ideally once into an investment opportunity, and then that investment opportunity sending proceeds back to your IRA. The only reason you'd want to do this is if you are needing access to your IRA capital very quickly, very readily, and you don't want to consistently be paying for checks and going back to your IRA custodian and asking them to send out checks, because that can get frustrating, delay your checks going out, and it can also cost extra fees. Okay, so this is another way to self-direct your IRA if you want access to the money more readily, more actively. Okay, let's talk about a solo 401k to a self-directed IRA. So a lot of people have past employers or current employers where they have a 401k and they want to take some of their 401k funds and self-direct it into turn into an IRA and essentially self-direct it into real estate. Now, your IRA custodian is going to guide you through this process, okay? And normally what they're going to be doing is helping you consolidate your 401ks together so you can properly self-direct your 401k, turn into an IRA, and then self-direct that into real estate. So you can use 401k funds to invest in real estate if you can roll the funds out of the plan into a self-directed IRA. Now, again, your IRA custodian will guide you in this process, and part of selecting the right IRA custodian is talking to them about what your situation is, what you need to consolidate, what you're confused about, and they'll guide you in that process. If you feel like they're an IRA custodian that can't help you or don't understand your situation, then obviously they're not the right one for you. Your solo 401k or self-directed 401k or IRA is prohibited from engaging in transactions that benefit you or your direct family or your business. Just like just like an IRA that's self-directed, your solo 401k has to follow these rules and regulations. So again, there are rules you can and can't do with your IRA capital. Self-directing it does not allow you to break those rules. You just really have to understand those rules because it is up to you and your custodian to make sure you're doing the right things with these funds. Okay. Your IRA custodian will guide you in this process from A to Z. So again, it's very important to pick the right IRA custodian that understands your needs and can facilitate you in moving your capital properly, effectively, and ideally low cost into the right investments that you select. So let's talk about why people self-direct part of their IRA into real estate. Well, first of all, the stock market is very volatile, and most of us are taught to just pile our money into the stock market. I remember when I graduated from college and I was 22, my college advisor said, just work your butt off, take 10% of your income, put it into the stock market, max out your IRA, and over time, when you're 60, you'll be able to retire based on your investments in the stock market. I was 22 years old. Here was this person telling me that I had to work for the next, 40 years of my life to have a shot at retirement. Now, again, that could be a great strategy for a lot of people, but there are faster ways to retirement. There are better ways to build your nest egg than just piling it away into a mutual fund and hoping it goes up over time. Now, investing in the stock market isn't necessarily a bad strategy. We always suggest people should have a certain part of their investments in the stock market, properly diversified within the stock market. And a mutual fund can be a great way to diversify within the stock market. But it's not the end all be all. Stocks and bonds are not where 100% of our wealth should be situated. In fact, a lot of our wealth should be actually backed by brick and mortar assets, producing cash flow, offering tax benefits in high demand markets where people are always going to need a roof over their head. See, high demand real estate, apartment buildings in high demand markets here in North Jersey are somewhat recession resilient. As the stock market goes up and down and up and down, and no one really knows where it goes tomorrow, people still pay their rent. People still need a place to live. And as interest rates go up, it becomes more expensive to buy a home. So if you can't afford to buy a home, you still need to have a place to live. You're not going to sleep on a park bench. So people end up renting during recession. So the reason people self-direct part of their IRA into real estate is to hedge against the stock market, build long-term wealth, earn cash flow on a quarterly basis, grow your nest egg faster than traditional investments. Stock market on average does about 7 to 8% a year. We tend to achieve more of a 10 to 12% annual cash and cash return for our investors. Also, take control of your retirement account. Be able to know exactly where your funds are invested. With our investors, we create a new fund for every property. You can see here on the right, here's a property we achieved 24% annualized cash on cash returns to our investors. That means they investing with 2 years got back 50% of their initial investment through a cash out refinance, completely tax-free. And now those investors enjoy quarterly cash flow. And in the future, they'll enjoy additional refinances as well. They still have full ownership of the property and they're still enjoying quarterly payouts and long-term equity growth and long-term refinance payouts indefinitely while invested in high demand real estate here that's professionally managed. So they know exactly what's going on with their investment. They can log on to their investor dashboard, see which properties they're invested in. They enjoy quarterly updates and monthly updates explaining exactly what's going on with their property and quarterly financials as well, along with quarterly cash flow checks. So every single month, they learn how we're improving the building, how we're fixing properties as landlords, and they earn on a quarterly basis also. So this allows our investors to learn as they earn and know exactly where their funds are invested, exactly how that project is performing, and what to expect in the future, the near and long-term future. Finally, people like to make a difference in inner city areas. We invest in Newark, Patterson, Jersey City, Bayonne, Rahway, New Jersey. We're looking at Plainfield, Trenton, Morristown. So these are cities where people like to make a difference. Maybe you know Newark or Patterson, New Jersey. Maybe you've seen downtown Newark boom and you see people making good returns in that city, but just aren't sure how to get in on those returns. That's what we do here at People's Capital Group. We bring well-vetted off-market opportunities to our passive investors. About a third of them use a self-directed IRA to invest in our real estate fund and in our different projects. It's affordable to start a self-directed IRA account, generally about $250. It's pretty easy to do it. It takes about 2 weeks. So because of all these reasons, people enjoy self-directing their IRA into real estate with People's Capital Group. And that's why we've been helping people do this over the last decade here in New Jersey. So our mission is to help people invest in real estate to create long-term wealth for themselves and their family. Seth Martinez and I founded this company in 2013. It's a New Jersey-based real estate investment company, and we help people invest in real estate long-term. See, we help people build legacy wealth here indefinitely. There are exit options along the way. You can exit every 3 to 5 years of the refinances and get back your initial investment. But the best strategy is really to invest for the long term, build legacy wealth, get those big cash outs over time and reinvest those in different opportunities and keep planting seeds and building your wealth over time so that you can retire, ideally before age 60, or have the option just keep working but not need the money so much, right? That's nice too. So that's what we focus on here, is building that legacy wealth with the flexibility to exit multiple times along the way. But we really like to instill that mindset of investing for the long term, building wealth for the long term, and helping others to do the same. We have an in-house property management company that's skilled in the art of repositioning apartment buildings and taking non-performing assets, making them perform. So that's our specialty here at People's Capital Group. We've helped over 100 people invest in real estate over the last decade. More than 90% of our clients reinvest their returns into People's Capital Group future opportunities, and that allows them to plant additional seeds that grow into large profits down the road. We have about 25 million in assets under management throughout New Jersey. We've fixed and flipped properties. Seth and I have wholesaled properties. We've bought and sold big and large properties, commercial, residential, all throughout real estate, New Jersey here. And we've done about 300 real estate transactions together, Seth Martinez and I. So here's our process. First, we find a great deal. We will look at 400 bad deals to bring our investors one good, well-vetted deal with value add in a high demand market here in North Jersey. We complete our due diligence on that property. There's multiple levels of due diligence to make sure it's a good investment opportunity, a smart investment opportunity. We secure financing on the property by shopping around and finding the best bank to give us the mortgage on the property. Then qualified investors invest. Now, we actually have more investors than we do opportunities. So the hardest part is finding a good opportunity in New Jersey, a discounted apartment building for sale with rents below market value, where we can increase the value of the property by increasing rents over time and improving the property. Finding this property in a high demand location for a discounted price is like finding a needle in a haystack. And a lot of people like investing in real estate and have seen our track record through the years and come to our monthly networking events, or maybe enjoyed our monthly webinars or weekly webinars, our weekly podcasts, and all of our educational content and our events that we put on. So a lot of people follow us and are qualified to invest in our group here. So we actually have more investors than we do deals. So it's important, if you do get qualified to invest with us and you do get on our investor list, you review the opportunity in a quick manner, make a decision, generally in about 2 to 3 weeks, if it's an investment that fits your goals. Once we've selected the people who are going to invest in the opportunity, we will close on the property and begin repositioning the building. That means renovating it and leasing the units out for top dollar and improving the building and making it a nicer place to live and improving the value of the building for our investors. Number 6 here, the investors begin to earn cash flow on a quarterly basis. And then number 7, investors enjoy a cash out refinance every 3 to 5 years, earning about 50% of their initial investment back every 3 to 5 years. Now, the investors can exit at the refinance, or they can stay invested. A better tax strategy is normally to stay invested long-term, although for an IRA, it's all tax deferred regardless. But if you do stay invested long-term, number 9 here, we build legacy wealth for our investors. And that's the idea. Keep that principal at work. Keep earning quarterly cash flow. keep earning large lump sums upon the refinance. And in time, hand this investment down to your heirs. Of course, you can't take it with you. So at the end of the day, you want to build legacy wealth and have the option to hand that down to your heirs and spoil the crap out of your kids, or maybe build a library or something like that, or donate $1 million to World Vision. Wherever your values lie, having wealth and having legacy wealth gives you the freedom and the option and the power to make a real difference in this world, especially at an age where those things really start to matter as you get to the second half of your life and realize, hey, you know what? Wealth is just a matter of the impact we can have on those we love and the world around us and our society around us. So building legacy wealth is a really important thing. And I do it myself, and I preach it to our investors as well. And I help our investors build legacy wealth day in and day out here at People's Capital Group. Number 10, reinvest over time. That's just a great investment strategy. The big lump sums our investors are making from these investments, they often put that back into another opportunity available here at People's Capital Group, and that allows them to plant another seed and continue to build legacy wealth for their heirs and themselves. There's me on the left. Here are the co-founders of People's Capital Group. That's Seth Martinez on the right. I focus on client relations, investor relations, making sure people are kept abreast on our monthly updates and exactly what's going on with their investment, with their property, learning how we take mismanaged buildings and make them perform for our private investors. I oversee marketing and branding with weekly podcasts, weekly educational webinars, such as this one here, and also in-person events every single month. Normally at a different brewery around North Jersey, or a restaurant where we have over 50 people generally attend, where I'll do a quick talk about some type of different real estate topic. And also there's different sponsors there and like-minded investors. So check out those networking groups. If you're following us, definitely try to make it to one. I started as a real estate agent in 2010 and actually sold properties for Seth. He was buying deals at pennies on the dollar in a crazy market time. He had sold a medical billing company, was flush with cash. So he had was buying properties. We bought a 6-family together. We renovated it. We refinanced our money back out. We found it through nailing a "We Buy Houses" sign to a telephone pole, bought it for a great price, got all our money back out in a year and said, hey, this works. Let's raise more capital, buy more buildings, develop our own management company in time. And we've done that over the last decade and helped a lot of different people invest in real estate, built a nice portfolio as well through the years. So Seth oversees due diligence of initial properties, property management, and general business operations. So here's how we help people invest in real estate. We make it pretty easy to get started with us, although you do have to qualify as a sophisticated and accredited investor. If you're not sure what those terms mean, you want to set up a call with me, Aaron Fragnito, or a member of our team to learn more. The minimum investment amount is $30,000, so we do make it pretty accessible to get started investing in multi-million-dollar buildings with just a small investment of $30,000. Investors can own part of a $3, $6, $10 million apartment building. Larger investments are rewarded with a better share class, allowing for stronger returns. A higher preferred rate of return is offered to investments of over $100,000. A preferred rate of return means all the proceeds from the investment goes to the investors first. This can include cash flow and proceeds from the refinance. These all go to the investors first, making sure they earn a certain return on their investment. After that, the proceeds are split up on an equity basis. But a larger investment allows for a higher preferred rate of return, therefore a higher overall return on investment. So we have some investors with $30,000 self-directed from their IRA. We have other investors with 7 figures with us. So we enjoy working with both investors getting started and experienced, more higher net worth individuals as well. The minimum investment period tends to be 3 to 5 years, okay, as we buy, renovate, and refinance the property. It takes time to do that. We're removing non-cooperative tenants or low-paying tenants and renovating those units and leasing them up for top dollar. We're learning more ways. We're implementing more ways to make income on the property and lowering our expenses as well. And all these things take about 3 to 5 years to force value into the property. And we tend to do a refinance every 3 to 5 years thereafter. There's no maximum investment period. You can build legacy wealth with us long-term, which a lot of people enjoy doing. And of course, the cash out refinance strategy allows for big lump sum payouts, generally about a 50% return on investment every 3 to 5 years through the cash out refinance, which investors really enjoy. Most importantly, we are IRA and solo 401k friendly, so we accept IRAs, self-directed IRAs. You do have to work with an IRA custodian, as I explained earlier in this presentation, but it's pretty easy to get started with one. If you're not sure who you want to select for your IRA custodian, you shoot us an email at info@peoplescapitalgroup.com or set up a call with us and we'll talk to you more about how to select the right IRA custodian for your goals. So that's it here at People's Capital Group. We talked about how to select the right IRA custodian for your goals, how to transfer that capital, part of your IRA, from whoever holds it now into that IRA custodian, and then into a real estate fund to start earning stronger returns in an asset class that's truly diversified out of the stock market. Now, this is a way to take control of your IRA, build it faster, truly diversify it, but it's not a way to cheat the tax code or pull from your IRA early, penalty-free. But it is a way to take control of your retirement account. So if you want to learn more about how we've been helping people self-direct their IRA into high-demand New Jersey apartment buildings over the last 10 years and see how we've implemented our infrastructure here with our in-house property management company and our boots on the ground to source incredible off-market deals here for discounted prices in high-demand Jersey markets, then let's connect. Let's schedule a call. Let's learn about your investment goals. Let's see if you qualify to invest with People's Capital Group. And if you do, we could talk more about the process of getting started investing with us, what the experience investing with us is like, the types of returns we've achieved in the past and plan to achieve on our future investments, and see if it's a fit building your wealth with People's Capital Group. So go to peoplescapitalgroup.com, take a look at our tons of webinars and content there, hundreds of podcasts as well. And when you're ready, click the button that says register to invest and schedule a call with me, Aaron Fragnito, or a member of our team. We'll talk to you about your investment goals and hopefully you qualify to build capital with People's Capital Group here. So I hope you'd enjoy this presentation about how to self-direct your IRA into real estate. I'm going to take some questions now. We'll answer the questions here by type, but thank you so much for joining us here tonight. Enjoy your evening, and I hope we could build our wealth together by self-directing your IRA into real estate with People's Capital Group. Have a good night.